presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
This is awesome. Come on, Parlez-vous. We're going over to Paris. What's happening?
Hey, Tom, it's Adam from Paris. How are you, sir?
I'm doing great, Adam. Yourself?
That's good. Long time no talk. I appreciate everything you've done for me and my family over the years. So,
well, we appreciate you grabbing a problem with us.
Yeah, sir. I've done gold reports and all the softwares and all your books and read. It's generational. Thank you.
Thank you so much. Appreciate it.
Yes, sir.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Final trading hour of the day, and we kick things off on NVIDIA earnings day. Biggest market capitalization in the world, and you're talking about 3% of the market capitalization of the entire globe. So if there were 33 equal-sized companies that encompassed everything the globe did, NVIDIA would be one of those 33. And market capitalization-wise, pretty remarkable when you put it in that context. Just as big when you're talking about in the U.S. You jump over right now in NVIDIA. A little volatility to the downside, to the upside today. Right now, we're basically flat, slightly in the red at 181.60. And as I was talking about this morning, you're looking about a $12 move in either direction. We'll get into NVIDIA shortly in terms of the expected move tonight. So NVIDIA trading at $181 and the market looking for an expected move of about $6 in either direction. S&P is up by 14 points right now. We take a look at the price and volume. Not exactly what you'd want to see, okay, to put it lightly. You trade lower a week ago. That was Wednesday. You did bounce from that low. NVIDIA had a great bounce on that Wednesday. I've talked about it on a couple occasions. And you get the acceleration on less volume on Friday than what you had on the move lower to lows. And then since then, you actually trade a bit higher, and it's going to be light on volume as we come over those highs. You do have a high of 65.08. We're trading at 64.97, but we got a low volume day coming in. We're only done 652,000 contracts. This is on the S&Ps. You did over 1 million yesterday. You did over 1.4 on the way up, and you did 1.5 on the way down. NASDAQ 100, even more pronounced. All right, you make that acceleration a week ago on volume. You trade lows of 23,035, and since then, it's been lighter volume. You did get a little bit of a pop yesterday, but again, just kind of trailing off a bit. Dow, different story. You got quite the acceleration on Friday. You did it with volume, and you check out the Russell, same thing. Did it with volume, right? So Dow, Russell, quite the acceleration. NASDAQ in particular, though, a little worrisome. You know, you think about the day you had in terms of the acceleration on Friday at a higher price, Jackson Hole, and you couldn't even match the volume they had in the last couple days, right? And the NASDAQ 100, that was the lowest volume day of the prior 4. And since then, it's been light volume as we've held those highs. So you jump to NVIDIA, though, and it is a different story on NVIDIA because you reject that low, you do it with volume, and we've had some nice volume on these bars on the way up on NVIDIA. You're coming into highs out here. Okay, you back it up to NVIDIA July 31st. You had a high out here of 183.30. And you ripped lower on July 31st. And you did it with 221 million shares. You do have that rejection on huge volume on the lows. But I found myself wondering today if this is going to rest somewhere between the 185 to 170 range. You got a lot of volume off there on the highs. You got a lot of volume here that rejected that low. And you back this up intraday. Yeah, that was last Wednesday I was talking about. You had NVIDIA trade down $8 and up $8 intraday. That's almost $200 billion down and $200 billion up market cap. Quite the acceleration. So we'll see where they come in today. We jump over to Kohl's. So talking about Kohl's this morning, and how about it? Holding on to those gains, up by 22.4%. And yeah, they blow it away, man. You get into these numbers on Kohl's, They expect the earnings in the range of 50 to 80 cents a share. They previously just gave themselves a profit. They were saying 10 to 60 cents. Okay? They expect net sales to decline but 5 to 6%. Okay, but the earnings front. Previously, they anticipated sales would fall 5 to 7%. Earnings 56 cents a share versus 29. Second quarter income 153 million compared to 66 million a year ago, even as sales are dipping a bit. But yeah, the market's saying, you know what? Maybe you're going to make more money than we thought. Maybe you're not going BK here. And that's your weekly. You put things on a daily, though. Now, you can't, we live in interesting times. We live in different times, okay? And I love price and volume, but benchmarking it sometimes versus the mean volatility gets very difficult, right? This is an extraordinary day to the upside built off fundamentals. We're going into a day built on meme mania where it traded 200 million shares up to $21. Now, what it did, though, on Kohl's, I was looking at this earlier. I was talking about $20, man. And that's pretty close to the highs of the meme mania, and that's probably the next stop. You got lows out here of about lows on Kohl's of $19 to $20. You reached a low of $17.89 in May of 23. You reached a low of $17.68, and then you chopped around in that area for the better part of July all the way through to like October of 2024. But yeah, those are some real numbers on Kohl's. You jump around to some of the other retailers, TJX, one of the best channels out there, up by 0.5% today. This market rolling over a bit since I've been talking, huh? What just happened? There's some selling for you. All right. Let's see what's driving that one. We just got some selling, that's for sure. All right, we jump to what else is going on. So, NVIDIA. China, going to be one of the things that they're going to deal with here, okay? And you're talking about China. It was off limits at first in terms of the H20. Now they can sell them. The U.S. government's going to get 15% of that number. Uncertain sales forecast. Changing China outlook spurs $15 billion gap in the revenue estimates, okay? The high end versus the low end. And look how far when you start to go out. They don't know whether they're going to have next year 48 billion or 63 billion. Imagine that. Now, think about the multiples that they're priced into this equity, okay? The back and forth over NVIDIA's China sales causing headaches for Wall Street. The inclusion, okay, and this is one UBS, gentlemen, the inclusion of the China sales could lift NVIDIA's forecast by as much as 3 billion, even kicking back that 15%. We'll finish this conversation up. We'll take a look. But yeah, how about that range, right? Markets rolling over. NASDAQ in the red. We're almost 100 points off the highs. S&P's up by 7. Stay tuned, folks. We'll come right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We got the S&Ps up by 10, NASDAQ negative by 13 points right now. And yeah, you got a little bit of volatility coming in right now. And jumping back to NVIDIA. So I was going over some of the possible trades this morning, folks. And these are just theoretical trades, okay? But I was just making the remark when we come into this, talking about, maybe you're looking at an area. Okay, going back. Give me for a daily. You have lows out here on NVIDIA a week ago. Rejected that low of a 168.80. Okay, did it with a tremendous amount of strength. Finished higher. Green bar. And then on the upside, you got highs out here, and you pulled back from this high of 183.30. Okay, so you look at this. You say, this is a nice range. Now, folks, you can break out of this range, okay? NVIDIA's looking strong right now, if anything. The way that you're trading higher on this continued sustained volume, look at these 3 bars of volume. 172, 163, and 168. So you're averaging almost 170 million over 3 straight days trading higher, okay? That's a big number, man, 170 million, right? Look how often we're doing 123, 138, 145. Even on the way down, some of these down numbers. Now, let's just say we have a range of 170 to 185, okay? What this trade setup here is, okay, let me get this right. Is you want to think of it as in selling, and I pause my words because options get difficult, folks, and I'm trying to be as clear as possible, and I understand them pretty well. But even explaining them, walking you through, and what you're collecting on each side, okay, what this trade is you're selling 2 credit spreads, basically, right? I'm saying, okay, I don't think it's going above 185, so what I'm going to do is I'm going to sell somebody a... Let me open these up so you can see. And it's an iron condor is how they label it in here. And it's great that when you're in Thinkorswim, folks, and you put the multi-leg options together, it'll automatically group them and tell you that you're in a vertical. You're in an iron condor, okay? But you should understand what they are regardless of what they name them. And the way that this trade is constructed is it's two credit spreads. You're receiving a credit for selling other people. What on their end is going to be a debit spread, right? So I sell a 185 call, and to cap my losses, because don't go naked in the options market, folks, there's really no reason to, okay? And to cap my losses, I buy back the 190 call. Now, these are the options that expire on Friday. So in this case, the stock's trading at 181, and I'm saying it's going to stay between 170 and 185. Well, you better believe that there's possible that it's not going to do that, folks. It's only $3.50 away from the high side of that. That's only a 2% move on NVIDIA coming into their earnings, and I just showed you how big of a range that forecast is, okay? And I don't know if I will be making this trade capping my upside. Maybe I go a little bit higher, and that's what you can do. That's what I'm going to show you in a second, okay? So you sell the call spread from 185 to 190, and what you do is you're the one selling the 185 call, so you're receiving about $4.25. And then to cap your losses, you're buying back the 190 call, so you got to pay the $257. So that leg of the trade is going to net you what, 175, okay? $1.75. And then on the downside, you're going much further out though, and that's it's not an asymmetrical trade, right? As in, this is where the market is right now at 181, and your max profit is a lot lower on the downside than it is to the upside in terms of how far you are away from that point. But then you get to sell the put below 170, okay? You're selling somebody the right to sell that share at 170. Well, you don't think it's going below 170, okay? So you sell that 170, you buy back the 165, and there is your 75 to 80 pennies of credit that you're getting on that side of that. It's a total credit of 254 is what it is. And what's cool about this trade is that that's your max profit, folks. You've taken in everything you can take in. Okay? When you're selling the credit, the best thing that anything can happen right now is that nobody exercises anything. They all expire worthless, which means that the shares basically are in between 170 and 185, because there's your max profit, and your max profit on this trade is 250. And guess what? If it trades outside of this range, you lose 250. That's why I like this comparison. Do a lot of you traders out there know that you can make a trade like this in options? And I know a lot of you do. But I know there's a lot of brilliant traders out there that just haven't dug into it occasionally and played with it. And I encourage you to play with it and see what kind of trading opportunities, because these types of trades are pretty sweet. Now, yes, you can be wrong all the time, okay? And this is not a recommendation on this trade in particular. But at least it's something where you're risking one to make one. And if this is your market bias, and it's not a bad bias, folks, saying that you're going to stay within that trading range, okay? And your break-evens are anywhere from 187 to 167. You've created yourself a $20 trading range that you break even. Now, you get into your max loss pretty quickly outside of those areas, okay? Now, let's say you say to yourself, you know what, that's great, but I'm a little worried that I'm too close on the upside, because NVIDIA is a great company, and I really see the ability for NVIDIA to even maybe go higher, you know, and I understand that that's the range and that's the high, but I think it might break its highs. I say, okay, well, here's what you can do. And that's where this gets really cool. The stock's trading at 181 right now, and let's just say, well, you know what, let's give it more room to the upside, okay? You say, instead of selling somebody a 185 call, let's sell them the 190 call, and we buy back the 195 call. Now, it does shift the risk reward. Of course it does. You've now just created a range from 168 to 192 where you break even on this trade. The catch is you take in less of a credit though. Okay? Now you're taking in $1.93, which is $193, because each option pair is 100 shares, folks. Okay? Each option contract is 100 shares. Your max profit is the credit you take in when you make the trade. Now you've expanded your range though, where now you have a max profit area from 170 all the way up to 190. Okay? And your max profit is $192, and your max loss is the $5 range on either side, okay, minus the credit you take in. So in this case, your max loss is going to be about 309. Pay attention to the blue line on this chart. And folks, if you're watching this, if you're a little lost, you can go through the archive. Okay, we archive everything we do right on the TFNN YouTube channel. Hit that like button, hit that subscribe button, and play with some of those, because the coolest part is you put a trade like this together, right? And then you can start playing with the variables, and you find out what you're most comfortable with where your bias is in your head. And guess what? If you don't like that side of it, you can flip it around completely, and you can say, you know what, if that's not enough money, you can be the other side of that. You can be the person, okay, that's potentially on the other side. Instead of making the 193, you can be the person, and we'll go over that when we get back, folks. Stay tuned. We'll talk some more options. We'll talk some NVIDIA. Come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We have markets oscillating a bit, getting ready for those NVIDIA earnings. Now here, jumping into one more aspect of these trades, okay? And I'm just throwing everything out with like four-legged iron condor, right? Credit call spread, credit put spread, all of it. It's not that simple, and you'll get it if you play with it, folks. I encourage you to, and that's what you can do with the demo account or just going over here and adding simulated trades. This is right within the Schwab actual trading account on Thinkorswim. But one part of this, if you're making these trades as well, okay, you want to look into whether it's margin, okay, whether you're talking about day trading rules that go into things. There's a lot that goes into this. So please don't take this advice, okay? As they say, consult a professional or whatever, because you get into, actively trading options and volatility. It is a complex game, but it's not on certain levels. Now, what I was going to say, though, is that these are four-legged trades. When you're making a four-legged trade, it is not as active of a market as if you make a two-legged trade. And this is essentially two-legged trades, okay? But this impacts your margins. When you're making multiple trades, they might not offset them in the same way that this trade, if you're making it as one, depending on who your broker is. So look into all that. But the point is that if you're just sending, let's say one part of this, okay, you do it separately. You initiate the call spread. You sell a credit call spread from 190 to 195. And then you sell a credit put spread below the market from 170 to 165. You create the same exact position, but you don't need somebody to buy all four. Now, here's the other part, though. On Thinkorswim, you can right-click this four-legged and show market depth, okay? And on the left here, this is the market depth for this exact iron condor. It's amazing. Now, it doesn't look that large, folks, but on a percentage-wise basis, it's a little large. Okay, you got a bid-ask of 189 by 2. That's not bad, but this is also the biggest stock in the world. If you're trading iron condors on a stock that's not active, whose options aren't active, and you're trying to trade a four-legged iron condor and a non-active option, it's not going to happen, okay? So that's the other side of this. Getting in and getting out of some of these trades in illiquid stocks can be very difficult. Okay, so keep that one in mind as well. And then the last part of it, like I was saying, the coolest part, though, is that the bid ask is not that large. A lot of it is going to be determined by whether you're just right or wrong in how you're managing that position versus getting middled between a bid and an ask. And I say that because you look at this trade, okay, and you say, you know what? That's just not enough money for me, okay? Even when we put it up wide, we put it out wide. You say, I understand that I have a break-even area that we created from 170, which is where we started to sell the put spread below the market, and the 190 area, which is where we sold the call spread above the market. We take in almost $2. You say, you know what? NVIDIA, they got some huge moves, and they do have huge moves, folks. Okay, you look at these moves that NVIDIA's had. This is NVIDIA swings after results, one-day moves. Yeah, there are some large moves, okay? But guess what? We got a range from 170 to 190, baby. That's a $20 range in a $181 stock where we max profit, right? And you got a break-even area from 192 to 168. Okay? $24 in an $180 stock. But let's say no, NVIDIA is going to move too far. I don't like it. I don't like it because I think there's a real chance that NVIDIA pops or blows out, and I don't want to be on the side. You say, okay, well, guess what? Now, this is where you want to have conviction. You don't have to pick a side of every trade, okay? You don't have to say, if I don't like that trade, then I'll take it on the other side. Of course you don't. But if you find yourself saying, no matter what trade I make, that's not how it is, okay? You can always flip the other side, and I encourage you to just analyze everything you're doing if that's how you're feeling, because you can be on the other side of every trade. So if every trade you're making is the wrong trade, then maybe you're looking at the wrong thing, because you can just flip this around. So you can say, no, you know what? I want to be the one that's making the money as this thing goes higher or lower, okay? So what do? You say, I want to be the one, right? Buying, okay? You're the one now that's paying the $2. You have a max loss position from 170 to 190, but you're only risking 200. And if the stock trades to 195 or or 165, you make 300. You make 1.5 times your money. You can do either side. Right there. There's the trade. Which one do you like? Right? How do you want that thing flipped? Do you want to be the one that's making all the money if NVIDIA stays between 170 and 190? In which case, what are you doing? You're the one selling volatility, right? Yeah. You're not long volatility. You're short volatility. You're selling people the right to hold the volatility when you spike, and you're the one that's going to make all the money when the stock does nothing. You want to be on the other side. You're the one buying. You're long volatility. You need the volatility in the stock to spike. So, and again, you're capping your profits. And the reason why you're capping your profits is because if you want exposure to NVIDIA, folks, and you want it for $2, yeah, you're not going to be able to buy the calls that are at the money. Okay, because at the money, right, or anywhere, I mean, you can go out, I guess, but it becomes difficult. You got to be biased. This one is just a straight volatility play. So I just want to go over that as we get into NVIDIA. There's some good information there. And I encourage you, if you were a little bit lost, right, go in, get a demo account, because the coolest part about this is you say, you know what, nah. And then you go, no, that's too much movement if I'm the one paying for the move. You know, let's tighten up the range a little bit. We say, okay, how about we got it where you only got to go to 185 to start getting any money back on the plus side. And you only got to go to 175 to get any money back on the downside. You still cap it at a $5 range, and then we see what that one looks like. Okay, and what that one looks like is, yeah, you're risking $313 to potentially make 187. Okay, but guess what? Your max profit's anywhere from 170 to 190. And there's a very real chance you're below 170 or above 190. So you get to see those theoreticals play out. And then you say, well, you know what? No. And this is where it goes cool. You say, no. I'm going to back it down even again. I don't think we're going higher. I'm going to give myself a bearish one, because I don't think it's doing anything on the upside. And I'm going to sell the 180 call, even though it's trading at 181 right now. Wow, you got to put up a lot of money for that one. All right, let's jump around and see how else we're doing coming into this market right now. We have Amazon shares slightly in the green. Apple up 0.4%. NVIDIA flat almost to the penny. How about that? If you were selling volatility for today, you made out. Maybe not after the close, though. We'll find out. Stay tuned, folks. We'll come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting, designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We jump around. You got the S&Ps right now, right at 6,500 to the penny, up 17 points or about 0.3%. NASDAQ back in the green. We had a little bit of a sell-off there. Market turned around just like that. A little bit of a spike to 23,560, and just like that, we're back above 23.6 right now. Yeah, we keep our eye on NVIDIA. And yes, they'll be out with their earnings at 420 is the number. All right, we talk about buybacks. So check this one out from Bloomberg. U.S. firms racing through $1 trillion buyback spree in record time. Yeah, they're planning to buy back shares at a historic pace. Announced buybacks surpassed $1 trillion on August 20th. And yeah, you better believe they're inflating where prices are, folks, in terms of where they are in the market. The shortest amount of time needed to reach that level. And we're pushing the valuations and the multiples. Over the last few months, Apple announced $100 billion following its quarterly results. Alphabet, JP Morgan, Goldman, Wells Fargo, Bank of America announced buybacks of at least $40 billion. This is this year. The banks, right? JP Morgan, Goldman Sachs, Wells Fargo, Bank of America, Visa, Citi, Morgan Stanley, and Apple and Alphabet at the top. Last month, $166 billion, the highest dollar value on record for July ever. And they're looking for $1.3 trillion. Quite a number. Absent dramatic slowdown in the economy, we forecast that 2026 completed buybacks will reach $1.2 trillion, which would be a new record. Yeah, we'll see how it plays out in taxes, man. But, to a certain degree, that's the wind at the back of the market. But boy, those are not real prices also to a certain degree. I remember you look at Apple. Yeah. Even NVIDIA, $25 billion. But the number always keeps going down. You watch these companies for long enough, man, you pull up their share price, it's always declining from those buybacks. And yeah, we talk a little bit of the swing. Now, the only thing about this, folks, that I don't understand, they have an implied move in here. We've been talking about it all day. I don't know where they get this. Maybe they're talking about a $6 move. There is not a 6% move up or down implied in NVIDIA right now. It's just not there. We spent a half hour. So, Bloomberg, shame on you. Makes me want to question exactly what else is going on in this chart. There have been some big moves, but I don't know if they've screwed up the price because there's about a $6 move. Right? We just went over it. If you're watching the program, NVIDIA earnings, options, are pricing in at the money. What are you at, 180? Yeah, about $5 or $6. And that's through Friday, not even the 1 day. And somehow they're pulling a 6% move in either direction for a 1 day move on NVIDIA. Nonetheless, there have been some big moves, man, right? 15%, 10% on the downside, 6%, 8%, whatever these numbers mean if they're real from Bloomberg. But yes, big moves. Implied volatility ramping up, not surprising. All right, we get them at 420. China will be in focus, of course. Yeah, outside of the ongoing H20 drama, they do have a strong track record of beating. But how about that range I got you on forecasts, on revenue? You talk about a range, man. I was reading this one earlier. So Google, 35% of managers overseeing small teams in the past year, you're gone. We have a more efficient as we scale up. Yeah, a third of the managers overseeing small teams. Executives at the meeting said that a total of 10 product areas have presented voluntary exit programs. 35% fewer managers, fewer direct reports, leaner and meaner is what they're saying. A lot of fast progress. I mean, I love how it's always about fast progress versus just being able to do more with less and getting rid of people you don't need. And so that was managers who oversee fewer than 3 people. You talk about micromanaging. And many of those managers stayed with the company as individual contributors. So they're not managers anymore. They have eliminated 6% of the workforce in 2023. You're going to see a lot more of these stories coming up. It'll be interesting to see how they're always labeled as efficiency, and really it's just productivity through technology on many aspects. And yeah, how about the NFL coming to you? You know, I've been watching a documentary on Netflix, America's Team, about the Cowboys. That's pretty interesting. Jerry Jones, the Dallas Cowboys, and how, you know, he really ramped up promotions, took on the NFL when it came to sponsorships, had the NFL in there, had Nike in there. But YouTube, Fox, standoff, high stakes as college football and the NFL season kicks off. The NFL season kicks off 1 week from tomorrow, folks. 1 week from tomorrow. YouTube and Fox, yeah, they're still in a standoff. Google's YouTube said it may remove channels like Fox Broadcast Network, Fox News, and Fox Sports from its streaming service if the two sides don't reach a deal. You talk about last minute, man. Nothing like a deadline. Fox is set to air a much-hyped college football game on Saturday with top-ranked Texas facing Ohio State. Should be a good one. But yeah, if the company's unable to reach an agreement with Fox by 5 p.m. Eastern Time on Wednesday, it may remove those channels. The two sides are in a standoff. Fox is asking for payments that are far higher than what partners with comparable content offerings receive, YouTube wrote. So YouTube TV's got almost 10 million subscribers. Yeah, Fox has a lot of football games, college and pro. And Fox is set to air games starting next Sunday. I don't know where Thursday night kicks off. It might be Amazon. I don't even know what network is doing it. Yeah. Check out some of those streamers. Jump over to Netflix. Yeah. You know, Netflix, that was quite a run up we had. Almost historic, right? You run from 167 to 1341. The cat's out of the bag. They're making more money than God with advertising now, and now they have to live up to that plan. That was some selling coming off the highs there on their earnings. Warner Brothers up by 3% today. Paramount Skydance pulling back from some of the meme mania, down by $1.10 off 7% right now, giving back some of those gains. One more segment, folks. Don't go away. We're coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We check back in on the video one last time as we come in 5 minutes till the closing bell. And yeah, they are not usually immediately after. It's 4:20 that they'll be out. But you better believe that they're going to hit the markets, folks. NVIDIA is more than 8% of the S&P 500. How about that for weightings, right? 8% of the entire S&P 500. And yeah, getting in even. Yeah, NVIDIA right up there with Apple and Microsoft. It's weird how those weightings go. I'll have to pull up the NASDAQ exactly. Because sometimes they rebalance them and then you get a charge higher like NVIDIA's had. Hey, folks, NVIDIA's added over $2 trillion since where they were in April. $2 trillion. It's even more than that, I think. Let's see where we are. Because you're pushing 25 billion. It's so funny I say they always come down. This equity was at 25 billion shares at one point. They're at 24.3 now. Okay? For some buybacks. But you get about 25 billion shares outstanding, and you just went from a low of 86 to 186. It's almost 2.5 trillion. That's what I thought. Almost $2.5 trillion since April. How's that for expectations? Folks, there's never been anything like that before. $2.5 trillion has been added to the market capitalization of this equity, and we get to find out whether they're going to live up to it at 4:20 tonight. Should be interesting. Folks, thanks so much for spending your afternoon right here with me at TFNN. Have a great night. Have a safe night. See what happens in the NVIDIA, and I'll see you tomorrow morning, 9 o'clock for the morning market kickoff. Have a great evening, everybody. Have a safe home. See you tomorrow.
Building wealth